Joining us right now, the CEO of the company, Thierry Vanlancker, joining us on the show right now. Thierry, good to have you on the show. Paint companies have been relatively resilient amidst this, slowdown rhetoric. How would you say things have been for Akzo on the demand front in particular?
We remain very positive about the outlook in India. Of course, for AkzoNobel in India, it goes hand in hand with what we do on the global level. For the company, since we're one of the largest paint and coatings companies in the world, we basically said we take 2-3 years, that's what we call our 15 by 20 until 2020, to get our house in order, get the state-of-the-art systems, computer systems, processes, really look at our product portfolio, work on our manufacturing base, which we're all implementing at full speed here in India. So we've basically been less focused on the top line these last 2 years, and so that we have a healthy base for growth in the future. So for us, we basically see India as a very mature part in our global network. So in that sense, we see the demand is there, but we probably have been constraining ourselves for good reason in these last 2 years to then really go back to full growth in 2020.
Okay. For the last couple of quarters, though, you've underperformed your peers. Would this be because of conscious effort on profits as opposed to top line?
Well, what we realized on a global level, and India is very much part of that, is that we were growing very fast, but we didn't necessarily have the systems and the processes in place. And of course, in paints and coatings, if you grow very fast, the complexity start to increase quite a lot, and therefore also the productivity goes down. So globally, we took this, I would say, this fitness exercise where we said, let's take 2-3 years and all the fundamental work, look at our pricing structures, look at the segments we're operating in, look at all the internal work and productivity. So in that sense, in fact, the AkzoNobel India team is executing exactly and actually pretty perfectly on what they've been asked to do, to restrain themselves, work on the fundamentals, so that they're on a much healthier base for the future. Again, AkzoNobel is 230 years old, so just taking a bit of a pause in 2 years to get everything reset is probably not a bad thing to do. In fact, it's a healthy thing to do. And AkzoNobel India has been executing on that. And that may show the difference maybe with some of the other players in the market who in the meantime have been looking for volume, but sometimes at margins that may be sometimes questionable.
So is the second year reset period will be to focus getting top line and market share back?
Basically, market share is of course an important indicator, but the real factor we look at is how healthy is the company also financially. So to answer your question, obviously we want to definitely go back to our market growth entitlement. We are pretty ambitious in that respect. So you don't go to through a fitness exercise if you don't want to be really looking good afterwards, and that's exactly what we're trying to do. So I think 2020, to the latter part, I think we want to go back and reclaim our place within a much better position and much healthier, to then not only make sure we recapture or go back to our market share, but actually start growing faster than the market afterwards, and doing that in a healthy way.
So how do you expect top line to grow from here? Do you see government attempts, especially if the tax cuts are announced, could that boost demand?
A couple of elements in that. First, there is the normal organic growth. Good work that the team has done in India to really analyze the markets. Where should we play? Where should we not play? What is geographically the areas we should invest in, and the different approaches. So that is definitely work that's being done. And in fact, in the last couple of days, we had quite some in-depth reviews on that, and it is actually pretty exciting to see the transparency and the clarity with which the Indian team has focused on where they want to go. So that's actually pretty positive. That's in the context of organic growth. The second element, which is of course important, is innovation, new products. We have put a lot of effort on our R&D. In fact, in our whole transformation, we actually beefed up our research and development spend. You may also be aware that we've basically have taken really the lead on open innovation, which we call Paint the Future. which is working with startups, universities to really break out of the mold that most of the paints and coatings industry has gotten themselves into, to really new offerings to the market. So pretty excited with new introductions. Our new bonded materials in powder coatings is just one example, adjacencies that the team goes after, so that would actually get the growth back. And three, I think we are a financially very healthy company, so we do have the options to invest where is needed, but also if there is a good acquisition target, we would also consider that. And India, just like any country that is well performing in our portfolio, definitely has a seat at the table to look at good targets that fit our portfolio. There we're not really obsessed by size, but we're really obsessed by quality and of our business, and how can we really for the long term have a healthy business. So the hurdle rate for those expansions is pretty high, but that's what our investors expect from AkzoNobel globally and from AkzoNobel India very specifically.
Okay, we understand low-value products have been contributing more to the top line and demand for mid to premium products is weak. Is that something you've witnessed as well?
I think our team has in a very mature way keeping the discipline on looking where can they create value. Of course, you can't deny that there is another part of the market that needs lower priced or lower cost offerings. So I think we're working on that, but what you indeed see is that we held in a very disciplined way our eyes on the quality of the business, and not necessarily starting to overcomplicate with selling enormous truckloads of material that is just complicating the system and really doesn't bring much value short term, but actually not long term either to the company. So I could very much corroborate the statements that others have made to you.
What's the change in your margins and pricing in response to commodity costs moving as well?
There's two things. Well, we've been very vocal on a global level to our shareholders and to the business analysts that our intent was definitely to recapture our raw material cost, because it was just too high of an escalation. As I said, I've been extremely proud of our teams around the globe and also in India, how they've been able to recapture that, because as you can imagine, that has been very tough discussions with customers to recapture an increased cost that we had to offset. So that has been very, very positive. Secondly, the company had been globally, and also in India, by the way, relatively different businesses that weren't necessarily sharing information or best practices. And around the globe, we really now are one paints and coatings company. We see people working together to make sure that they align raw material ingredients so that we have bigger volumes for a specific grade and therefore can get better pricing. They look at best practices for productivity. In fact, the site visits I've done this week, the reoccurring theme is how people look at low energy consumption, lower waste production, etc., which is not only good for the bottom line, but also very good for sustainability, which in fact is extremely important for us. It's people, planet, paint are the three elements where we really focus on as a company. So it's really been around making sure our pricing is in line with what commodities do, managing our margin, because that keeps us healthy for the long term, and then looking at every corner on how we can keep our costs under control. And I think for 2020 that that game will be exactly the same, and probably also the years beyond, I would say.
Okay, thanks so much for taking the time out and helping us understand what really is going on with paints as a segment and AkzoNobel, of course, in particular. Quick